Stock, a type of investment that represents an ownership share in a company. 2020, a market crash. Thousands of people are losing their jobs. Thousands of companies are closing indefinitely. Now, even more people get out of the stock market or are even scared to talk about it. In fact, so many people think the stock markets are so risky and speculative, they would never even get into that, right? However, as famous investor Warren Buffett said, be fearful when others are greedy, and greedy when others are fearful. In other words, right now is the second best time to get into the stock market because the first best time was years ago, or at least in April 2020.
So, despite a lot of my friends and family members tell me not to get into the stock market because of the so-called potential second crash or, the timing might not be right, I always kind of believed in the idea that, as long as you know how to hedge risks and as long as you know what you're talking about, it's not going to be risky. Now, I'm not saying it's going to be completely riskless. And, I personally know people that failed miserably in the stock market and right now their whole lives are screwed up. But, as long as you know what you're doing, as long as you understand the trade-off between the increased reward and the increased risks, right? You're going to be able to hedge those risks. You're going to be able to manage your risks. And, but it's very important to have a lot of knowledge. So don't just go out there and, try to blow all of your money on a single stock that you think is going to blow, right? But rather try to analyze, try to get as much knowledge as you can. And this is exactly what we're going to talk about in this video. Now, my name is Vlad, and today I'm going to show you how I was able to generate $1,400 in the stock market over the last 2 months in passive income and how you can do that too. And if you're new to this channel, go ahead and click the subscribe button because I'll be uploading a lot of videos like that on financial topics and something school doesn't teach. And if you like this video, give it a thumbs up because it really helps the algorithm to promote it to more people and make them more financially educated. And let's just jump straight into the topic. Now, before we're going to jump into the nitty-gritty and I'm going to show you how I was able to generate passive income in the stock market, let me go ahead and explain how the stock market works, right? Let me go ahead and explain the fundamentals of the stock market. Now, a lot of people think that, if you want to get into some sorts of investing, you got to have a financial advisor, you're going to have a financial analyst. But in reality, in 2020, some forms of investing are actually pretty easy, right? And with a lot of apps available literally in your mobile phone, such as eToro, Robinhood, M1 Finance, literally anybody can get started with as little as $10, right? And if you just put $10 into your brokerage account or your investment account, and just kind of try to play around with the stock market and consistently trying to grow your portfolio, maybe over the time, maybe over 10 or 20 years, you're going to have a lot of money and you're going to be able to retire pretty early. Now, there are basically two main types of stocks that I personally invest in. There are value stocks and there are dividend stocks. So the value stocks are the stocks that are going to grow long term, right? Let's say you buy a stock for 20 and you believe that in 2 or 3 years, the stock is going to be worth 100 or something like that, right? And so over the long run, you try to generate income through the so-called capital gains, right? And the second type of stocks that I have is mainly the dividend stock. Now, these are the companies that might not grow, exponentially very high, but these are the ones that have kind of reached their state of maturity and are distributing their earnings to their shareholders through dividends. So on a quarterly basis or an annual basis, they're going to be giving you payments through dividends, right? So you'll be receiving usually, it can be $6, it can be $10 per share. It might not seem like a lot, but if you own 100 or 1,000 of those shares, it's going to be a pretty good strategy to generate passive income. But today we're mainly going to talk about value stocks, and there are 4 main different strategies that people use to pick those value stocks, right? So strategy number 1 is something that's used by around 80% of all stock investors out there. It's something Warren Buffett uses. It's something that's related to the long run, and it's called the fundamental analysis. Now, the second strategy is something that is only used by 10 to 20% of all investors. And this is the technical analysis, right? It's more like a short-term investment. It's more suitable for day traders, and obviously it's more risky. And so the third strategy is kind of used in conjunction with the previous 2 strategies, right? It's the so-called behavioral analysis, right? And there's this quote by Warren Buffett that says, be fearful when others are greedy and be greedy when others are fearful, right? It's about trying to predict the behavior of people, trying to see, if a lot of people are selling their stocks, maybe it might be a good time for you to get into the stock market and start, buying shares. And the fourth strategy is something that's also used by so many people all across the world, and that is investing into passive funds, right? The funds, the portfolios that are managed for you by so many other investors. And so this passive investing strategy actually outperforms so many active investors out there who use three strategies mentioned previously. Now, first, let's talk about the fundamental analysis. And like I mentioned previously, it's something that's used by the majority of investors out there. And so basically, fundamental analysis is value investing. And the goal here is to try to figure out the actual price of the company in your opinion, right? You're going to be trying to analyze the company from so many different angles and come up with with how much you think the company is actually worth. And then you're going to try to compare that price that you came up with the price in the stock market, right? And if, say the stock market price is lower than, how much you think the company is actually worth, then you're gonna wanna buy that stock, because over the long run, you will think that the price on the stock market will try to adjust to the price that you came up with, right? So the company in that case is undervalued, right? And on the other hand, if the stock market is higher, then you might want to go ahead and sell that stock. And the fundamental analysis is also about the long term, right? It's thinking 5 to 10 years ahead, and trying to reap the really, really long-term benefits, trying to increase the reward and minimize your risks. And so really in the fundamental analysis, you're going to want to learn the three main basic financial statements of a company. And those are the balance sheet, the income statement, and the statement of cash flow, right? And so those are the reports that every single company publishes on a quarterly or an annual basis. And so you're going to want to learn to read those statements, right? If you look at them right now and you're not familiar with the stock market or any of that, it might seem like, some kind of gibberish to you with, a lot of digits and numbers. But, try to go to Investopedia and investigate, right? What's a simple video? What's a simple YouTube video? And, what those actually mean, and you're going to be able to learn that very, very easily, right? And so based on those financial statements, you're going to want to try to come up with how much the company is actually worth, or if the company is undervalued or overvalued. And instead of just looking at how much the company makes, right, what are the profits of the company, because it's all really, really relative, you're going to want to look at some of the different ratios, right? So for example, there's so many different financial ratios out there that people look at and compare different companies. For example, the most popular one is the PE ratio, the price to earnings ratio, right? You take the price of the company divided by earnings per share, and if the price of the company relative to the earnings is too high, then the company might be a little bit overvalued, and you might want to sell that stock, right? But on the other hand, if the PE ratio is lower, you might want to think of look at some other factors and consider that company for investment. Now, I'm not going to tell you, what is the ideal PE ratio. I'm not going to give you the number, but because it's all really, really relative. You got to look at the industry average. You got to compare it to other companies, and try to figure out, if the company is actually in good conditions or not. So really try to use logic, math, and statistics and learn more about it, but also go out there and put your hands on it. Try to put like $10, or just you can literally start with $1. You could get some penny stocks and see how it works for yourself. And one of my favorite books about the fundamental analysis would be The Intelligent Investor. It's Warren Buffett's favorite book. It's really, really simple to read. There's no sophisticated financial language. So everybody can read it. So I totally recommend you go ahead and grab that book and you read it if you want to learn more about stocks. So now let's jump into the technical analysis. Technical analysis is used by 10 to 20% of investors out there. It's more suitable for short-term trading over the few hours, right, over the period of a few hours, or day trading, buying the stock in the morning and selling it for a higher price in the evening, right? It's looking at different patterns, right? Looking at how the company, if the company has risen in the past, you probably think it might go down, or if it has fallen in the past, you might think it might go up. So it's really trying to learn a lot of these different patterns that exist out there. and trying to predict if the stock price is going to go up, down, or sideways, and trying to reap some benefits off of it. Now, this strategy is definitely riskier than the fundamental analysis, but I know a few people that are doing day trading as a main job. The technical analysis traders, they already believe that current prices of the company, they already incorporate enough information from, those financial statements or what's going around that company or what's going on in the industry. And it's really about looking at the short-term patterns over, 15 minutes, 60 minutes, or, even a few days or a few months. And, kind of trying to say that, X is going to happen because Y has just happened, right? There's so many different patterns that you can learn. And the book that I recommend to read if you want to learn more about technical analysis and day trading is called Technical Analysis for Dummies. So I'm going to put the link in the description, so go ahead, read it. It's a pretty good book to read, but technical analysis is not something I personally use when I pick my stocks. And now the third strategy, the behavioral analysis, like I said, it's not used alone, but it's rather used in conjunction with the previous two strategies, right? It's about trying to analyze, how people react to different market events. For example, if there's a market crash and people are rushing and selling their stocks and trying to get out, it might be a good time for you to get in, right? Because, people are selling their stocks at a lower price. And, because the prices are rather low, it might be a great opportunity for you to buy some stock and, wait until, prices will get back to normal and sell that stock. And, it's something that happened in April 2020. A lot of people went out there and tried to sell their stock, and, the stock market crashed. And it was really, really a great time to get into the stock market back then. Because, if you've invested into the market portfolio back in April, you would reap some pretty good benefits already now, because the stock market, as you guys see, bounced back. So it's about exploiting, how people think and, different biases in their behavior and trying to use it to your advantage. And, the fourth strategy is something that I use myself too as part of my portfolio, is passive investing. Now, there's so many people that actually are passive investors without even realizing it, right? So for example, so many people have a 401k plan or their retirement plans. And this is something where, people have their money and those money are in the stock market. Now, the passive investing doesn't require that much time. And, even though there's so many different mutual funds, index funds, ETFs, which are the exchange traded funds, mainly I use this strategy to invest in the market. Now, a huge chunk of my portfolio is in the S&P 500, which is, one of the biggest indexes out there. And, there are some of the different funds that, invest and, try to replicate the index S&P 500. And, some of the most popular ones would be the Vanguard, the VOO, or the SPDR, right? So those are the ones that buy, chunks of the companies or the 500 biggest companies that they're trying to replicate the S&P 500. And, in case, one of the companies would go down or, crash dramatically, the other 499 companies would make up for it, right? And on average, this is something that's been outperforming 80 or 90% active investors out there, because the average return in the S&P 500, the average return of the market has been around 10%. Now, so how exactly do I know what companies to look at, what companies to try to even consider for the fundamental analysis? And this is where I use the strategy described in one of my favorite books called One Up on Wall Street by Peter Lynch, who was a fund manager at some point. And it basically talks about investing not in the stocks, but in companies that you know, in companies that you believe in companies that are going to work. And this is the exact strategy that I've been using. Now, guys, let's jump into my portfolio and let me show you what I actually buy on the stock market. Now, like I said, I use the Peter Lynch strategy. I buy the companies that I like, that I know are great, and that I believe in. And so right now, these days, these companies turn out to be the biggest, the giant tech companies, right? Such as Google, Facebook, Apple, Microsoft. And now there's a really, really great book about these companies called The Four, right? It's about the first companies to reach the $1 trillion mark, right? Because Apple, Amazon, those are the companies that are worth more than $1 trillion. And these are the companies that I know for sure people are going to be using in the future. And these are the companies that I'm not scared to get into, right? I know there might be some, dark sides to these companies. Like, for example, there's been a lot of Facebook scandals of, I genuinely believe that despite all of these scandals, these companies are really, really going to be out there for years to come, right? So Facebook has a lot of data, and as you guys know, in the 21st century, data is going to be everything. And so does Google, so does Apple, so does Microsoft, right? So these are the companies that I own. As you guys can see, I bought them in early July for that particular price. I bought Google, I bought one stock of Google because it was kind of expensive. I bought 4 stocks of Facebook. I bought actually 5 stocks of Apple, but they did a stock split, which made me end up with 20 shares of Apple, Microsoft 3 stocks, and then just to kind of diversify my portfolio, I've invested in the ETF called the Nasdaq QQQ. So I bought 8 shares of the QQQ at $258, and right now they're worth about $292, right? So this is how much I was able to generate on the stock market. This is how much all of these companies grew in value over the past 2 months. And so hope you guys found a lot of value in this video. I'll try to record more of the similar videos. And so go ahead, get started in the stock market, because this is really, really something that's a lot of people should get into, because some of these could be really, really great ways to make money, to have a financial freedom, or if you're young, it could be a great way for you to retire earlier. And so thank you guys for watching this video. Like I said, go follow me on social media. I'll be giving away a lot of advices like that. Go give this video a like, because like I say, it really helps the algorithm. And I'll see you guys in the next one. Thanks for watching.